GM, good morning. Welcome to the Milk Road Show, the daily crypto show that summarizes the crypto world as neatly as a For Dummies guide. I'm your host, Jay Hamilton, and today we are joined by Daren Matsuoka, data scientist for a16z, or a16z, as you say in the US. In today's episode, we're going through their recent State of Crypto report. That's the State of Crypto in 2024. If there's one report that you should read this year, other than our pro reports, of course, it is this one. We've been covering this report for years, and it truly is one of the best reports in crypto that takes data from so many sources and compiles it all to tell you guys how big is crypto today. What is the trajectory we're on? Where are we going long term? What are the key applications of crypto that are taking off and that might be next to take off? What sectors are set to grow exponentially? And where are we headed in the coming years? Before we jump into today's episode, we just need to take a moment to hear from our sponsors who make this show possible. Do you own your data? Nope. Every post, click, and search you make is controlled and monetized by unseen giants. I've had enough. It's time for Navigate, where their mission is to give back data ownership to you and share profits with you. That's right, money in your pocket. How, you ask? First, the Navigate browser extension makes it easy to turn your everyday browsing into passive income. Second, the Data Quest game, where you can boost your earnings and help train their AI. Visit navigate.io today to earn and own your data. Meet Uphold, a trading platform that's changing the way you think about money. Imagine this, earning up to 4.9% APY on your US dollars. No catches, no lockup periods, and no fees. And yes, it's FDIC insured up to $2.5 million. They offer access to over 300 digital assets, which you can trade, store, and exchange with confidence, knowing Uphold operates with a 100% reserve and a transparent model. Create your account, fund it with a few taps, and you're ready to go. Click the link in the description and join Uphold today. Daren, welcome to the Milk Road Show.
It's great to be here. Thank you.
Awesome. So excited to have you. I want to start with, before we jump into this report, obviously being an active participant in writing and creating this report and pulling data from so many sources, you looked at a lot of stuff as you pulled together this 60-page report. Give us your takeaway. When you wrote this, what was one of your main things that you said, oh, wow, I didn't expect that?
Yeah, I mean, I guess to step back, I think, in the crypto industry, there's often a lot of noise. There's often a lot of jargon. There's often, a lot of data to sift through. And I think every year we like to take a step back and just kind of look at the industry holistically, see all of the data that we have, talk to various experts, and really try to understand at the highest level kind of how are things in the crypto industry. And so we looked at a lot of data, we talked to a lot of experts, and I think the report really does paint an optimistic view of the crypto industry. I think we are at all-time highs when it comes to activity and usage by a number of different measures. We're starting to see some of the key applications like stablecoins emerge. And I think the infrastructure story, which we've been talking about now for many years, is finally coming together in a way that is really nice, and in a way that I think will unlock the next wave of applications in the months and years to come. And so I walked away from this report very optimistic about the future of crypto and kind of how far we've come over the last few years.
Nice. Love to hear the optimism, bullish vibes for sure. You mentioned stablecoins and you mentioned infrastructure. Those are two key takeaways that we're going to discuss today. Before we do that, you guys have been writing this report for 3 years. How would you say this report compares to a year ago if we reflect back to 2023?
Yeah, I mean, I think if you look back to 2023, and we actually first started doing this report in 2022, and the world of crypto looked very different. I think we were still kind of talking about the infrastructure improvements that we wanted to see. Ethereum in 2022 was still consuming huge amounts of energy with proof of work. We've since transitioned to proof of stake, solved that problem. We've made a lot of improvements on just bringing fees down for the end users, which I think is really important in the crypto space. And I think we can finally say that the infrastructure pieces are coming together. And as a result, we're in the early days of seeing some real kind of Web3 applications start to emerge. And I think we could not have said that a year ago or 2 years ago. And so I do kind of believe that we're at this inflection point when it comes to the infrastructure being able to unlock the applications. And I think that the data kind of speaks for itself when you look at the activity and the usage and some of these emerging applications.
Let's go. That's exciting talk all around. Okay, let's start with a look. You guys did a great job putting together a look of how big truly is crypto today. You said it yourself, like there is so much noise in this space. There is experts galore on crypto Twitter telling you things that are true and unfortunately things that aren't true. And you guys have really put together a solid look of truly how big is crypto today. So when we look, I'm just going to pull up this first visual today. When we look at the size of crypto today, what are we looking at?
Yeah, so I think there's actually a few or a lot of different numbers that we can unpack here. But I think at the highest level, what you can look at is the number of active addresses across various blockchains, and how many of those addresses are transacting on a monthly basis. And that number is at an all-time high. In September, it was 220 million active addresses for the month. And we also overlay this chart of internet users starting in 1992. And you can see that we're on a somewhat similar trajectory here. And so you can sort of extrapolate out to the point in which the internet reached a billion users to kind of draw some conclusions about maybe where the crypto industry is headed. Now, I will be the first person to tell you that active addresses isn't necessarily the best measure of crypto adoption. And in fact, we do further analysis to try to arrive at what we think the real number of users is. But still, I think this is a very positive, high-level trend to look at here, and exciting to see the trajectory that we're on when it comes to just the overall size of the market and the activity that we're seeing in it.
Yeah, for sure. It is so exciting to see. And if you guys haven't seen, if you guys are listening and you can pull up the video, do pull up the video, because looking at the internet adoption rate and comparing it to blockchain is something we've all been doing for several years. I think since you guys first wrote this report, and it is amazing to see if you look at the internet, it hit 1 billion users in 2005. So by internet terms, we are in 1998 in blockchain adoption. So we got about 7 years by this scale, the log scale, that we could hit 1 billion users. Now, I'm glad you brought up that point, though, because here at Milk Road, and particularly on our research team, we always have this debate as well as to what are wallets compared to humans, and how do we differentiate those two when we know that so many people have multiple wallets and bots and things like that. How did you guys think about that when you were collecting data for this report?
Yeah, so we thought a lot about it, and probably this is the area that I personally spent the most time trying to reason about, because we really do want to have an honest view of what is the size of the market, how many people are using crypto today, and there are a number of different approaches that we took to estimate the number of real human crypto users. One kind of approach starts with the active addresses and applies some filtering and deduplication based on-chain analytics and forensics. And so we wrote a whole blog post about how we use different methods to try to filter the 220 million active addresses down to a set of what we think are real human users. We can also look at reported wallet data from companies like MetaMask and mobile wallet market share to estimate and kind of triangulate on a number and compare that to kind of the analysis that we did filtering active addresses. And we arrived at a range of 30 to 60 million real monthly active users based on this analysis. Of course, it is a wide range, and I think this stuff is really tricky to get right. But we wanted to kind of do our best to show how many kind of people are using crypto on a monthly basis. And we believe that number is 30 to 60 million. Now, an interesting number to compare that to is the 617 million people around the world who own crypto. right? And what does that mean when you look at those two numbers together? Only 5% of crypto owners are actually using crypto, meaning interacting on chain, which, in my opinion, presents really the biggest opportunity for the industry today, which is to re-engage some of these passive holders and bring them on chain and convert them into crypto users. And I think just looking at the kind of relative sizes of the two groups, I think really shows the opportunity for the industry and for builders to bring people on chain.
And as we know, for better or for worse, speculation has been our best use case until stablecoins came along. And so it's not a surprise that the largest number is passive holders and passive investors. Honestly, shout out to a lot of our listeners who are probably not very active on chain, but are here to invest and are here to capitalize on this new tech and be here early. And that's okay. But I think you're so right. We have all these people who own crypto, and now we just don't really have the apps yet that are exciting them. But I feel like I say this every year, and it's going to be in my 2025 predictions, but it feels like we're at that tipping point. Would you agree?
I would totally agree. And I think it's all driven by the infrastructure developments that we've seen, right? Which have taken some time, and rightfully so. There's some complex challenges to solve when it comes to scaling blockchains. But I think the industry has done a great job solving a lot of those challenges. And I think we're really at the tipping point, like you said, where these infrastructure unlocks are going to lead to some new applications in the coming year.
The other slide I want to pull up quickly before we move on from the size of crypto today is you guys broke down of these 220 million monthly active users in September. You broke down which chains they are active on. And this tells also a very interesting story, particularly for our listeners who are investors and are very curious which chains have the most adoption and the most activity. What stood out to you here?
Yeah, I mean, I think just for similar reasons that I described earlier, you got to be a little bit careful in how you reason about some of these numbers, because of course there can be bots, and in particularly on chains where it is very cheap to transact, oftentimes people will spin up many addresses, and so it is take everything with a grain of salt. But I still don't think it's unfair to say that Base, Near, and Solana were some of the top destinations for crypto users, and really the breakout growth of Solana in particular has certainly been something to watch, and you can see it in the data here.
Yeah, amazing to see. Based on this data, 100 million monthly active users on Solana. The next closest chain, 31 million for Near, and then 22 million for Base. Incredible to see those chains really achieving breakout velocity compared to the rest. Okay, let's go to stablecoins. We talk a ton about stablecoins on this show, and one of the key takeaways from this report really was that stablecoins have found product market fit, which is so exciting. And the way you guys broke this down is amazing. And I just want to bring up a slide here to show really demonstrate how much the product market fit exists for stablecoins. Can you break down this slide, which really shows why they have such great product market fit?
Yeah, I sometimes think people overthink stablecoins. I think really what happened in the last couple of years is that stablecoins got very cheap to use, and stablecoins are a product where when they're cheap to send, it's a very good product. When they're expensive to send, it's not a very good product. And I think by implementing a lot of these infrastructure developments that I've talked about, it has allowed fees to come down, which has made stablecoins a good product. And I think it's not a coincidence that this is the year that they've seemed to find product market fit. And this slide, I think, kind of just shows the drastic reduction in cost for users that we've seen, compared to the traditional finance system. You could pay $44 to send an international wire transfer. In 2021, if you were using Ethereum and USDC, you would have paid about $12 for that transfer. In September of this year, on Ethereum, you would pay $1 for a stablecoin transfer. And now if you use Base layer 2, you could pay less than 1 cent for a stablecoin transfer. And that is a more than 99% cost reduction. And I think this is what infrastructure improvements are all about.
It's incredible to see this, and just so exciting. $44 compared to cents, fractions of a cent, especially for a lot of this connects to remittances and people sending money home to friends and family around the world. And they're not sending big dollars, a lot of these people, right? Like, sure, we have institutions that are moving large billions of dollars around the world, but we also have, somebody who's sending money home to their grandma in the Philippines. And the difference that $44 to send $100 versus cents to send $100, like, this is real use cases that the world really needs.
Totally. That's an incredible use case. Also in countries with rampant inflation like Argentina, people are using stable coins to protect their assets. And, now they're able to do so in a way that's efficient and easy and low cost. So a lot to be excited about when it comes to stable coins.
This is the other slide that, just while we're still on stablecoins, really stood out to me, was looking at stablecoin transaction volume in comparison to the alternatives. Can you break down what you guys found in here?
Yeah, I mean, I think the fact that we can even put stablecoins into a comparison against PayPal, Visa, ACH, and the FedWire is pretty mind blowing to me. I think you look at just the data here; it really is competing against the world's biggest companies and systems to move money, and that's not a trend that I think will stop anytime soon. I think we're really unlocking something special here.
And if we look at this, stable coins are moving 8.5 trillion in volume in the last year. Is that in the last year, or sorry, is that in the quarter?
This is in the quarter.
In the quarter, compared to PayPal, only did about $500 billion. Visa did about 4 trillion. Now, ACH and FedWire both did more. ACH did 21 trillion and FedWire 284 trillion, which is just insane. But you can see, yeah, we're already higher than PayPal and higher than Visa. Like, that is, I don't think a lot of people. It's like, hey, if you're at Thanksgiving this year and you need a story to tell people, like, just tell them this slide right here. This is so, like, get away from like the Dogecoin and the meme coins. Don't talk about that around the Thanksgiving table. Talk about this. Like, this is real and it's happening.
Yeah, I agree. This was one of the more surprising things that I think I came across when we were building this report, and definitely a talking point.
This is the other thing that really stood out to me as well, is you guys have a great chart showing stablecoin adoption in comparison to crypto trading volume, right? And what this shows is that even though we entered a bear market and crypto trading volume went down and the speculators kind of left in the past few years during that rough bear, the stablecoin usage kept climbing consistently.
Yeah, I mean, one of the criticisms that we see with stablecoins is that, it's only used for crypto trading, right? It's only used to settle crypto trades. But I think this chart in particular shows otherwise, right? If that were the case, we would expect to see a high correlation between stablecoin activity and trading volume, and we see that we actually broke that correlation, which indicates that there are use cases beyond just crypto trading for stablecoins. Some of which we just talked about.
The other thing that I want to look at is, okay, so stablecoins doing great. When we look at the rest of the categories that are performing, what are we seeing here?
Yeah, so as you can see, most of the activity on blockchains today happens across DeFi and stablecoins. I think that speaks to the fact that we are still pretty early. We've got our eye on some of these emerging categories like gaming and decentralized social, of course, the NFT market. But I think still the reality of the world is that DeFi and stablecoins dominate activity, and some of these emerging categories are going to be the ones to watch, I think, in the coming years as the infrastructure gets better. And that's where I'm looking at hopefully over the next couple of years.
Yeah, this slide was really bullish for me. So we got stablecoins at 32% of active usage of blockchains. Then we got DeFi at 34%. As you said, I think both still have room to grow, a ton of room to grow. But then if you look at, we have gaming at 2%. That feels so small to me. That just says, hey, there's a massive opportunity. NFTs at 1%. I almost feel like my audience might throw mud at me if I use an NFT right now, because they're in the gutter down bad. But that's because they were all the speculative NFTs. And we're going to look at a slide later. It talks about how NFTs are so much more than I think people realize right now, especially those who've been in the space for a while. We still think about NFTs like they were in the last cycle when they basically made 0 sense. There is a lot of use cases for the NFTs. And then social at at under 1% usage. Like, we just have so many categories that have so much potential that I think we could really see emerge. Daren, when you look at DeFi, what do you see in the DeFi space?
Yeah, I mean, I think the space has matured quite a bit since that crazy summer of 2020. If you recall, it was just a few years ago that this whole space was getting started, and there was kind of wild, crazy, wild west out there. And I think now we're starting to see the space mature. Kind of the category leaders are emerging, and we're seeing now real solid activity across a number of, I'd say, real DeFi categories. And I think that's exciting to see. And I think we'll continue to see growth there. And I am excited as ever about the DeFi space.
Yeah, the other thing that stood out to me on the DeFi space is just the amount of volume of dollars. Like, on this slide that we've got up here, we have multiple protocols with over $10 billion in total value locked. We did not have that in the past cycles. I think it's very easy to not notice the growth because there's so much noise, as you said, but this is real products that are growing at rapid rates.
Totally. Thousands of DeFi protocols controlling billions of dollars. I consider that a success in a very short period of time.
This is another slide that stood out to me that sort of is connected to DeFi. Is we have this, and this kind of comes back to the crypto ethos of why we are all here. Is a lot of us have this belief in decentralization and a fear that centralization and too many large companies and large banks are controlling our data, controlling our money. What did you guys see when you looked at this growing need for decentralization?
Yeah, I mean, I think there is consolidation happening across the U.S. economy. This is happening in the kind of banking sector, with 5 banks now controlling nearly half of all assets in the U.S. On the tech side of things, the Nasdaq 100, there are 6 tech companies that make up more than half of the Nasdaq 100's value. This consolidation is very worrisome, in my opinion, and I think crypto can present a solution to help make things more decentralized across the economy. But we did show some data just to really drive this point home, because it is one I think that is very important for people to be aware of.
Yeah, completely. If we take a look at infrastructure, so you mentioned at the beginning that you're excited about infrastructure, and you're excited that we're at a place now where maybe we're ready for these apps to be built, because I think a lot of it comes down to the cost to build has decreased so much, and we need that low cost so that people can experiment and they can try things and they can try apps, and they can do so without this massive lift that it was maybe last cycle, past cycles, of you need to hire all these devs, and you need to build your own chain first before you can even launch an app. And a lot of that has changed. What stands out to you when we look at infrastructure and where we're at now compared to past years?
Yeah, we could spend a lot of time talking about, EIP 4844, which was an
Mhm.
upgrade to Ethereum that drastically reduced costs for layer twos. We could talk about the continued progress and development of high throughput layer one chains like Solana. Blockchains, kind of as a whole, are processing more than 50 times the amount of transactions per second that they did just 4 years ago. I think that speaks to the infrastructure improvements that we've seen. We could talk about the ZK developments. Zero knowledge proofs are a really key unlock and could potentially be the end game for blockchain scaling, privacy, and interoperability. We could talk about better user experiences that we're seeing through things like account abstraction. But I think at the end of the day, all of these infrastructure improvements boil down to, how do we kind of create a better experience for the users? How do we unlock cheaper fees, which we talked about, for applications to be able to experiment? And I think we are seeing the results of all of this hard work, and is why I do believe we're at this inflection point where the infrastructure is finally good enough to be able to start to see some of those applications. And it will take some time, right? It's not instantaneous. It's not like the infrastructure comes and then immediately all of the applications are there. The developers still need to build, and so we may still be some months out. But I'm definitely watching this coming year for the applications because I think they're around the corner.
Yeah, me too. I feel the exact same. AI was a new section in the report. I don't think there was a whole section about AI in last year's report. And if you have not been thinking or hearing about crypto times AI at some point in the past year, you're probably living under a rock. When you looked at crypto and AI, you guys did a great job of breaking down in a slide that I'm going to pull up here about how these industries can work together.
Totally. And I think if you just take a step back and look at how the AI industry is unfolding here, I think it's very clear that AI is a centralizing technology. It rewards people who can accumulate the most data, the most compute resources, the most talent. And I think it is on a path, kind of like we saw with the rest of the U.S. economy of kind of extreme consolidation into the hands of a few very powerful big tech companies. And blockchains may be one of the only credible counterbalancing kind of decentralizing forces that can really work well with AI. And I think there's a number of different kind of categories and use cases that we're starting to see in terms of how it can come together. It is still very early, but I think the high level point here is that AI is a centralizing technology, and blockchains are that counterbalancing, decentralizing technology that I think could help solve some of the pressing challenges that are faced by the AI industry, including things like proving that something is authentic. We're going to see a world of endless deepfakes in the coming years, and blockchains and crypto technologies can help kind of mitigate some of that risk. Just democratizing access to compute resources, another kind of area that is being explored. Just making things more transparent. Not building AI in a black box, and hopefully compensating people for the data and the IP that they contribute to these AI systems. And I think it's still a bit early, and I think it'll be fun to see how this all unfolds, but certainly a trend to watch in the coming year. It's will probably be one of the biggest developments, I think, in 2025.
Okay, as you mentioned 2025, when you look ahead, first you guys talked about how we're entering a new innovation cycle. Can you break down what you mean by that?
Yeah, so we like to think of these crypto markets under a framework that we call the price innovation cycle. And the idea is that when crypto prices go up, people get interested. And then when people get interested, developers build, and then the products that get built are what kickstart the next wave. And so we think that the markets appear very chaotic from the outside, but they actually follow this underlying order. And we've seen this play out now 4 times since Bitcoin's inception. And I think there is a question of, are we entering the 5th wave here? And it is admittedly a bit hard to tell if it's the prices have gone up, but it's hard to tell if it's driven by net new interest in innovation or more of the external factors that we've seen, like the ETFs and the political tailwinds for the industry. But even if we're not in the 5th wave, I think history has shown us, and you can look at examples like ChatGPT, it really only takes one product to kickstart an entire industry. And like I said, we're excited about the pipeline of applications that we think are coming in the next year. And if we can get 1 or 2 breakout killer applications, then we may be seeing ourselves in the next wave, in the cycles. So I'm optimistic, I'm excited, and we'll see what happens.
Yeah, I think it's such a good example to bring up ChatGPT, because it went from nobody using AI. I shouldn't say nobody using AI, I'm generalizing here, but like mass market, consumer based, was not really on the radar, to all of a sudden every single person you talk to knows ChatGPT and understands it and possibly uses it. And I'm not just talking about like the tech nerds, like I'm talking about your mom and your uncle and like everybody. And that's all we need. That's all we need, that we just haven't seen that yet. And it's hard because like it feels almost a bit like, is it too much hopium to say we're going to get it? Like, don't worry, it's coming. I don't think so. I think that there is enough builders and enough activity happening that will happen. And when it happens, it'll happen fast, just like ChatGPT. And you won't see it coming. And all of a sudden, you'll be like, oh, wow, everybody is using crypto or everybody is using blockchain. Maybe they don't know it. Maybe they're not using it the way you're using it right now, but that will come.
I think that's right. I'm excited.
If we go to some thoughts for the future before we wrap up here, I've got a slide up of a bunch of, I believe, quotes from your team. Maybe some of these quotes are from you. So feel free to share whether it be your thoughts or whether it be thoughts from your team. What most excites you about the future? Where do you think we're headed in the next year?
I'm very excited for a lot of reasons we've already talked about, right? I think the infrastructure story is coming together, which will hopefully unlock that next killer application that will kind of drive the next cycle. I am definitely watching closely for that. I think there is a lot of optimism around kind of what could happen on US in the US regulatory environment with new legislation that is looking to be passed that could kind of just create more clarity for builders, which is what I think the industry really needs to get the smartest and best people into the space. They need to understand what the rules of the road are. And I think we're on a path to getting there. I'm watching stablecoins very closely just because they have the potential, as we discussed, to really be a breakout application that kind of hits a tipping point next year. And then, all the early experiments that we're seeing with gaming and social and NFTs, I do kind of believe that, this Web3 vision will begin to materialize soon. And, I think now is kind of the time to be watching for it because, we've got the pieces in place to make it happen. And so, I will continue to trust the price innovation cycle, which we, have followed closely for years now. And I think we're at the point where, we can start to see some of this breakout activity and the vision really come to life.
Completely agree. Daren couldn't have said it better myself. Thank you so much for joining us today. Shout out to you and your entire team for writing this incredible report. Everybody listening in, we'll put a link to the report in the show notes. If you want to read it, highly recommend you do. It's just fantastic, packed full of so much information. And I also want to know, what do you guys think were the highlights of 2024 as we reflect back here with Daren? What were you most excited about? What stood out to you? Let us know in the comments. As always, thank you so much for joining us. Have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.